I want to call on Oliver Sloup of Blue Line Futures. He is based in Chicago, and man, there's a lot of stuff going on to talk about in the markets here. The wheat market catching everybody's attention here this morning, Oliver. Is there anything that's going to change that today?
Well, I don't know if anything's going to change it today, but I think we could see the volatility continue as we roll the calendar into the month of November. Obviously, as you'd mentioned, the big move comes on the back of Moscow suspending its participation in the deal, the grain export deal. But it was also reported this morning that from Reuters that there were 12 ships carrying about 350,000 metric tons leaving Ukrainian ports. So the big question now this week is, okay, are these ships going to continue to be able to leave the Ukraine ports, or is Russia going to impose a blockade? And flip a coin, I don't know what's going to happen. My first instinct would be that Russia's going to impose a blockade. That'll likely keep a bid under these markets here as we roll the calendar forward. $7 is going to be a big level for the December corn contract. Psychologically significant and technically significant. If we get out above there with some conviction, there's a gap all the way back to June 21st, which comes in near 728. So if we continue to get these bullish headlines for the grain markets, I think that we could see another move to the upside.
Well, just to refresh our memories of our viewers and listeners out there, when this whole thing broke out earlier this year with Ukraine and Russia, if you recall back then, there was an issue where someone put a bunch of mines in the Black Sea. And there was a kind of a debate, a lot of finger pointing on who actually mined the Black Sea that made it impossible for ships to navigate through there safely. That's when this grain export deal was actually approved with help from Turkey. So now, if that's the case, if Russia is not going to guarantee safety, one has to wonder, is that going to lead to more sneaking of some mines in there, and that could threaten commerce in a big way out there?
Absolutely, 100%. And like I mentioned, we had 12 ships leave the ports in Ukraine today, but is that going to continue? Is going to be the big question mark. And as you alluded to, there's a lot of skepticism revolving around Russia and safety of leaving Ukrainian ports. And if something were to escalate even further, potentially we see another move higher in some of these grain markets. Here in the States, though, above $7 in the December corn contract, I think you're probably going to start to entice a lot more producers selling, especially this time of year. So it'll be interesting to see how these next couple of weeks play out.
But with the backups on the river system here, is that going to keep a lid on grain prices?
That's a good question. I think from the money flow perspective and all the other catalysts that we're taking into account, we potentially get a move out above $7, and that sparks additional buying from the funds, maybe gets us upwards at 720. But getting out above there, I think, is going to be a big stretch. Funds are relatively net long for this time of year. They're about 264,000 contracts long. This isn't typically the time of year where they're adding aggressively. So, like I said, it'll be interesting to see. I think a lot of the money flow here over the next couple of weeks is going to be revolving around what transpires over in the Black Sea.
Well, if there